Stocks and gold up, bonds down. We're going to jump into these charts and figure out what's going on in this market. Appreciate you joining us. If you can't join us every day for 10 minutes, if you can't carve that much time out of your schedule to figure out what's going on in the markets, you're wasting your time. You don't need to tune in here. I appreciate all of the dedicated folks that join us every day for 10 minutes or so to follow these markets and figure out what's going on, figure out what's up with the price percent oscillator, the derivative oscillator, understanding the Heikin Ashi candlesticks, trend lines, the Bollinger Bands, all the things that we look at on the S&P 500, the NASDAQ 100, gold, and bonds. And if you don't have 10 minutes to spend with us, then you're just wasting your time. And if you can't do it 5 days a week, if you can't follow along with us and fill out those daily market worksheets, you don't have to do that every day, but the weekly you do need to do. And when you do trades, you need to fill those out every day. Now, if you want to be totally involved and immersed, absolutely, the daily market worksheet is something you should be filling out. And you don't even have to fill it out all the way. Fill it out partial ways, at least. Fill in the spots where you're keeping up with which direction things are going. You don't have to spend an inordinate amount of time. You can do it as we go through the training every day. But I'm telling you, my friends, if you're not studying, paying attention, following, doing practice trades, keeping up with the markets, you're not going to know what's going on. I'm going to put 2 special trainings at the end of today's training. In fact, I'm going to put 3. One is going to be on the daily market worksheet, how to fill that out. The other is going to be on the trade worksheet, how to fill that out. And the other is going to be how to use free stock charts in TC2000 to do practice trades to actually keep up with your entry point and know minute by minute, hour by hour, day by day, how much you're making and how well you're doing in your practice trade. Percentage change increases, price, number of shares you can set, and whether you're plus or minus. And then when you cash out, you can actually see if you did what you hoped you would do. And I'm telling you, my friends, if you're not willing to make that kind of commitment, I'm just entertainment. Just put me on in the background, or even better yet, don't put me on. Go listen to some music because you're wasting your time. Now, for those people who are committed and want to move forward, I love you, appreciate you. I'm here for you. Let's jump into these markets. What do we see happening? Going into the 4th week, it appears, of nice, strong up movement. Actually, I guess the 3rd complete week we're going into now after 4 weeks ago when we had the crossover going up back on the 25th of January, the week ending then. We're going into the 6th week since things bottomed out and really started moving up with green open box candles. We have the derivative oscillator continuing to gain upward momentum, price percent oscillator continuing to move up, and our Heikin Ashi candlesticks. We are seeing nice price movement as far as the week goes, prices above the 2-day trend line and the weekly. So things are looking nice on the weekly chart. We go to the 2-day. What do we see there? Well, the prior 2-day candle had given us a doji where it had really shown us that things were very indecisive, tending down. And then what happened? Well, the next day after the prior 2-day candle ended on Friday, we saw Monday and Tuesday, we had up movement. And in fact, the up movement's been rather nice. This latest 2-day candle has moved above the 2-day trend line. We will try to draw a better trend line. We want to try to capture 3. We can do it. We always want to, on trend lines, try to capture 3 candles or more. We've captured 3. Price is nicely above that, above the weekly trend line. Derivative oscillator continuing to lose upward momentum, but that price percent oscillator was sort of flat, now is not as flat. It's moving up, which is good. We'll continue to watch the 2-day, see what we see happening and what's going on that 4-hour chart. After strong up movement in the morning and the afternoon, up 1.29%, looks like we're getting close to a 4-hour crossover. Derivative oscillator has been losing downward momentum for the last day and a half. And the price percent oscillator looks like it's close to crossing over, going up. We'll see what we see on the morrow as it goes, but things are looking quite nice. We go from the S&P 500 to the Qs, the NASDAQ 100 on the weekly, up the strongest. Now, the S&P was up 1.29%, NASDAQ 100 up 1.48%. Now, when I immediately look at the 4-hour chart, however, what I do pay attention to is on the weekly candle, the prior week, we're not up to as high, just very close, but not quite up to as high as the wick was the prior week, which of course is going to show you a bit of a sideways slide. What's the good news is derivative oscillator continuing to gain upward momentum, price percent oscillator heading up. And we go from the 2-day chart, from the weekly to the 2-day, and this latest 2-day candle, that's where we see the sideways slide. We really topped off in the market back on Wednesday the 6th, with a high of 171.37, and what we see through the course of the day, 171.14 is as high as things got. Didn't quite get up to as high as they did prior. Derivative oscillators losing a little bit of momentum, but that price percent oscillators ticked up more on this latest 2-day candle after a red doji. We go from the 2-day to the 4-hour, and of course we can see two strong up candles, up strong in the morning, followed by the afternoon. Still don't have a crossover yet on that 4-hour chart. Perhaps that will occur on this next day as we continue to watch and see if the derivative oscillator flips and the price percent oscillator. So we'll continue to watch, see what we see. We can see how things move through this 200 period moving average, which again, it didn't keep things from moving through it, but it sort of leveled out on it and then moved back up, which is nice to see. So we'll continue to watch, see what we see on the Qs for those of you who've been into that play since it crossed over going up back on Thursday, the 31st. So we'll continue to watch, see what we see there. So we go from the 4-hour back to the weekly, and of course we go to our only down chart for the day, and that is 20-year bonds. Now, 20-year bonds going into the third week of some decent up movement. Not as decent as it could be, because when we look at the top of these wicks, we can see that so far this week we've not gotten as high as the prior week, but price movement is above the weekly trend line. Derivative oscillators lost a little bit of its energy, continues to do so, and the price percent oscillator is going a little flat on us. We go from the weekly to the 2-day, and of course, remember, the weekly is in a confirmed up move. The 2-day is in a confirmed down move, getting closer, it looked like, to crossing over, but then this latest 2-day candle, bit of a red spinning top, kept that from happening. Derivative oscillator continuing to lose downward momentum, but that price percent oscillator maybe a little flat and actually heading down, so still in a confirmed down move. Don't have the opportunity to jump into a trade yet with both of our midterm, our 2-day, and our long-term weekly charts moving in the same direction. Not happening yet. 4-hour chart, in fact, at the end of the day, looks like it's crossing over, going down after things really topped off all the way back on Friday afternoon, the 8th. So we'll just continue to watch and see what we see in bonds. No trade right now. Wait for things to shake out. And of course, we go lastly to gold. Start on the weekly chart. Just a magical weekly chart. You can go back almost 2 years and not find a weekly vertical crossover that did not portend decent profits as far as you're jumping into a good practice trade. Just beautiful. So what do we see going on now? Well, gold has been weakening over the course of this week. Price movement still above the weekly trend line. Derivative oscillator losing upward momentum. Price percent oscillator also not heading up as strongly as it had been. We go to the 2-day chart. What do we see there? Well, this latest 2-day chart has crossed over going down. Is that going to be enough to drag the weekly over? Well, it's been going up since October the 5th, the week ending then, so we'll wait and see. So far since October, not been enough. In fact, the two times it actually crossed over on the 2-day chart, back on the 2-day chart ending Monday, the 12th of November, and back on the 2-day chart ending Friday, the 18th of January. So we'll see what there is to see. Don't have a trade at this point in gold with that divergence of the 2-day being in one direction and the weekly being in another. And of course, changing things on these charts is so beautiful. If you don't have TC2000, if you are serious about training and practice trading, you need TC2000. That is the type of trading software that we use, web-based. We have $50 off. I believe it's $50 off if you subscribe to the service. If you'll look in the show notes, there is a link that gives you that discount. It may be $25. I may be getting that confused. But regardless, it's some real money off if you're interested in jumping into TC2000. If you've been following and practicing along with freestockcharts.com, this is the paid version, worth every penny. I've had it for years and have never, ever questioned its worth. So give that a shot. If you haven't purchased our book, we would love for you to do so. It is available, 8th Printing, Charting Your Way to Wealth. You can see the links in the show notes. And of course, if you want the real special stuff, be a Patreon supporter. Those are the folks who care, really care about us, and they're the ones that we take care of the most. Depending on your level, you can get the book for free. Depending on your level, you can get a year's worth of Trader Journals, which is a daily market worksheet, weekly market worksheet, and trade worksheets for free. You also get all sorts of great training. Short chart training. You get the special training that we have on the quarterly chart. You get the special training we have on Bitcoin and the special Bitcoin charts if you want to practice trade and follow that. And of course, once a month, we have our call-in Q&A, and we also help you track and chart. We do this once a month with a special broadcast, help you track and chart the stocks and or ETFs that you are interested in. We take a certain number of those and go over them. So if you're interested in knowing more, follow the link to our Patreon page. You'll again see that in the show notes. So we see gold is now crossed over, going down on the 2-day chart. We finish up with what gold is doing on the 4-hour chart. And of course, we see it really just going sideways, still in a confirmed down move. So the derivative oscillator is losing downward momentum. Price percent oscillator, however, is still heading down. This means at this point, with that divergence between the 4-hour, the 2-day, and the weekly, it doesn't really matter what the 4-hour is doing right now because we don't have a trade. So we'll continue to watch, wait, and see what there is to see. We'll keep you posted. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.